Dear friends of Volumetric Trading, good morning from Eduardo Buratini. In this video, we'll look at the analysis for today, Thursday, October 9th, 2025, on the S&P and Nasdaq. We're coming right after an FOMC meeting, and also right after a textbook trend day. We saw this in yesterday's session. The market extended significantly, decisively, and steadily into the 6,800 area as far as the S&P is concerned. So once again, we're at newly set all-time highs. In this situation, the first thing that's definitely worth considering is that these all-time highs were reached right on the heels of the meeting. In fact, we can see that the last swing that led to the creation of the high happened right at the end of the session. So even though the macroeconomic event on the calendar could have somehow changed the course of a day that had already started and maintained its entire bullish trend structure, it definitely lived up to expectations. So basically, we're once again at all-time highs. So in this situation, the first thing that naturally stands out is that, as we've said many times, in cases like this where the market has built not just a trending day with a clear volume and order flow structure, and therefore also a totally directional price action, we also find ourselves at all-time highs. On days like this, or rather, on the days following sessions like these, the first thing to do is always to keep an eye on the high of the trending day. In this case, the high? If it had been a bearish trend day, of course, we would have had to look at the low. So, our most important reference area for today will definitely be the 6,800 level. And we can see that since the market closed right at the highs, there are several chances it could move to the next higher zone already during the European session today. However, I would pay particular attention to how any potential acceptance structure above 6,800 is built, because it's very likely that even during the European session we'll see an attempt to consolidate and stabilize the price in this area. However, what the slightly more medium-term structure tells us is that our most important balance area, from which the market basically shot up without any resistance, is at 6,766. We can see this quite clearly also from a very important level that comes from the market profile. So from using the market profile as a tool to analyze the price structure, especially the structure of price acceptance, this 6,766, so let's say around 6,770, is definitely the area that will have the greatest and most significant meaning, in case the market returns to this zone during today's session. Because you can see here that we not only have a structure that clearly classifies this whole area as support, but also the order flow strongly favors a possible support zone, since you can see the market is concentrated right in this area between 6,760 and 6,775. So roughly a price range of about 10 points. Which is by no means a tolerance that's too wide for what the S&P has built up, an accumulation that then led to the creation of these highs. So, this whole area is definitely the best zone not only to look for retracements that could indicate a potential, at least a return to the new highs, so a move back to 6,800. And this obviously applies both from a purely intraday trading perspective, but also from a swing trading point of view, it could represent an absolutely crucial level. Because that's also what we consider the main line in the sand in a situation like this. Of course, on days like these, you have to watch closely for this breakout above 6,800 and when it happens, because generally, the ideal situation to analyze a breakout would be during the US market open, at the start of RTH. We might not get that today because, as you can see, the price has already been moving above this area since after the settlement. So, if we do see continued upward acceptance, we might not see a test of this 6,770 level during today's session. Maybe in the following days, but that would clearly require a significant retracement. The situation would change completely if, instead, we saw this breakout above 6,800 fail decisively already during the European session, meaning we would start to rebuild acceptance, first of all, below yesterday's POC, the closing POC from yesterday, which would also mean going back to accepting prices below the round 6,800 level. In that case, this scenario becomes much more substantial, along with a possible defense of the 6,770 area. With the standard volume of the RTH session, then it could at least provide a good opportunity to see the market make another run at it, with a bit more momentum, with some additional volume coming back into the 6,800 area in the meantime. So let's see for a moment what will happen in the various sessions today, both European and American. But you can clearly understand that this is the main reason why I absolutely consider the 6,770 level as the main line in the sand. If we were to lose this area, it would clearly change the scenario completely, not only from an intraday analysis perspective, but also in the short term. Let's say from now until the end of the week. Let's take a look at the Nasdaq, where we have a fundamentally similar situation, as was to be expected. In the Nasdaq, however, we see a clear acceptance, again during the session, completed by yesterday's session, above 25,300. Specifically, we reached a high at 25,365. Here too, we ended the session right at the high, closing exactly at the maximum. And you can see that already in the early parts of the post-settlement, we are continuing to expand northward. Now, here we have a slightly different situation because the area that provided the accumulation, which gave rise to this entire swing that then led to the creation of new highs, actually started 300 points lower. Exactly 300 points lower, here at 25,065. But the situation is identical to that of the S&P. Here too, we had a breakout from this previous balance area, and even from a price action perspective, you can see here how the price broke through this area and started to push and extend. Thank you. Obviously, from a volumetric point of view, we have some extremely important information here because there is a huge confluence, which also includes a particularly significant absorption detected by our plug-and-ball analyzer. But it's a situation that we can also see in the medium-term delta profile, and it's a scenario further supported by the presence of, thank you, the confluence of two important levels, exactly at 25,065 and 25,057. So basically in the same area. This confluence comes both from an old weekly value area and from the current week's -1 standard deviation. So from the perspective of acceptance and classification, This area is definitely considered a discount zone with very, very important levels. Obviously, as far as the Nasdaq is concerned, the market has expanded much more, so the real possibility, from an intraday perspective, of a somewhat more significant retracement, the level it will probably come back to test first, before confirming a possible directional change or not, is definitely this one, between 25,000, 2,000, and 50,000. You can see here where we had this particularly strong acceleration, and 25,290, okay. So, this whole area also marks the exit from a previous balance zone, where the price, by no longer accepting it, started to create new highs. This is definitely the most interesting area to watch for a retracement, to see if a retracement is validated. Because in the case of continued strength, this is the first level that would confirm a possible continuation to at least retest what were yesterday's highs. For this reason, I also feel comfortable validating this area as a potential line in the sand, but a minor line in the sand, because even if we lose this area in the Nasdaq, the market has risen, leaving several additional support points. The first, in my opinion, is at 25,160 to 170, which is the southern part of this swing low that yesterday triggered the price move. So, it's a minor line in the sand because losing this would open the way to 25,170, which is still an area where we could see some defense from buyers, a potential responsive buyer zone. If this area gives way, then we would fully re-enter a broader distribution zone, which at that point could bring the price back to its truly important levels, but which, at this point on the Nasdaq, serve entirely as support levels, those at 25,065. So let's see what happens during the session. Key levels to monitor: 25,260 to 250, around 25,160, 170. Obviously, all this analysis should absolutely not be considered as a public investment solicitation or as an incentive to take a position. It should be understood solely as educational and informational material. We'll see each other later for those who are Volumetric trading clients during the VIA Live, where we'll be trading with the markets open. In the meantime, I thank you all for your attention, wish you a good day, and happy trading.